Hi there, this is David Carr. I'm your realtor since 1996 here in Milford, New Haven Metro, and today we're going to be talking about the third quarter house price index report. We're looking at a slide of New England behind us, and you can see how Connecticut is 2.29% one-year appreciation. This is interesting when you look at all the states around us that have appreciated more, and this is what I'm going to be talking about in the video, is the statistics and the information that seem to present the fact that we do live in an undervalued market. And I think moving ahead, we live in an attractive place that has a lot of value. Our location close to the shoreline and the Metro North, Connecticut has a great quality of life, and I'd like to present this to you and give you the type of information that you would want to have if you were thinking about buying property right now. So we're going to go through these 55 slides. I'm going to move through them as efficiently as I can while talking about them, and at the end you're welcome to obviously stop the video if you'd like to see more. You can see the range of appreciation in the United States. We're going to see this in other slides, and I have a Carr value shelf that we've talked about in previous videos, and that showed another 2 points of appreciation since the second quarter of 2013. Most properties acquired before 2004 and after 2011 are worth more than they were worth more today than they were when people purchased them. A lot of people who have negative equity bought in the final stages of the irrational exuberance, and they may have used creative lending, they may have been unqualified. A lot of these properties have been resolved already through default. Some have been refinanced or had loan modifications, but you have to realize that a lot of the properties that are overvalued now were done with creative financing and adjustable rate mortgages. And I always tell my clients that you're smart to use a fixed rate loan and to lock in your price, because real estate's a good hedge against inflation, and you're going to be using money that you would have been spending on rent anyway. So this presentation, all from public databases, I do believe in the quality of life here, and the fact that our metros are undervalued nationally is a really interesting thing to consider. You're going to see the 5-year appreciation here. It's interesting to remember our metro is in there at 6% over 5 years, and I am optimistic about economic opportunity here on Metro North and our shoreline. So all transactions in the United States, you can see how we had the peak in 2007, we had the bottom in 2012, and we've had recovery. And we're going to see the charts in Connecticut are going to not show this recovery. Here we see the Case-Shiller, and we see the recovery again from 2012. This next one shows the Connecticut House Price Index, and you can see the peak hitting the bottom at 2012 and the basic flat line. And this is a statistical anomaly that I'm very interested in, and how this is an opportunity in the future. You can see the Economic Conditions Index for Connecticut is doing well, even though we see the deterioration from the recession, but our economic index is performing well. So we've got the undervalued house price index and good economic conditions. So if we look at the all transaction index for New Haven Milford, again you see the peak. Look at 2012, you see it flat there on the tail end of the chart, and the appreciation over time. And same thing for Bridgeport, Stamford here, and Norwich, New London, where we're anticipating growth due to the Naval Shipyard, and Hartford, West Hartford. So all of our metros show no significant appreciation in contrast to the national indices. So here we go, the whole United States again, quarterly and fourth quarter, and this is the monthly house price index since 1991, and we're basically flat since the bottom there, and this shows a percentage of increase. So here we had the in 2007, we saw the prices start to deteriorate through 2012, and then they started to recover. So once we got back to around 2016, that loss had been resolved, and since 2016, pretty much all over the United States, people are back into positive. So even if you bought and held on through that period, you would have come out okay on the other side. So the All Transactions House Price Index shows you the national ranking of 1-year appreciation of these metros, and we're again remembering the 5-year appreciation in Connecticut of 6.06, and this is about 7% due to adjustments. But you can see how the other metros are doing across the country, and then we're going to see ours here. You see Norwich and New London, 5-year, and Bridgeport, right on the Metro North, and there's New Haven, Milford. So, we're about 2 hours from Grand Central Station, $500 a month on the train. This is the FHFA news release. It comes out every quarter. It talks about how the house prices rose across the board in the United States, with the top 5 in annual appreciation, the states in the West, and 99 of the 100 metros all had appreciations. And these are the different types of indexes. We use the All Transaction Index here, and the history of tracking this, the methodology, which we're going to look at a little bit more. Here's our metro area here, and shows a volatility parameter, which is on the right. It's a percentage that how much this could be off. We see that on the right here, and we see in 95 it was a baseline of 100, and how basically through the 90s there was very little appreciation until 97, when it started to appreciate, and the appreciation became more aggressive in 2004. Around 2004, any house after that point in time is worth less money now, because we went down to the bottom, prices went up, and prices went down. They were all overvalued. And that was the equity line on the way back up from the bottom here. You can see prices are still coming down. And this was the value shelf when I noticed that we were hitting this point of stability. And you can see this 173 to 175 range in here. How we've had all these quarters of house prices in the very same range. And then we have about 5.5 years of stability in this 173 to 178, and then the recent 5 points up to where we are now. We had the same thing in Hartford, where we see the prices going up through 2000. There's the equity line as they continued to become overvalued, and we hit the peak, and the prices started coming down. And around the third quarter of 2011, this is the equity line. See, houses are worth more than the 175 now. We have the 5-year value shelf as we hit stability over the last 5 years, and then we saw the appreciation again in Hartford. And the same scenario plays out in Bridgeport, Stamford here, Norwalk, prices going up, and property now currently overvalued. And the point when we were back then, so anybody in that metro after 2009 bought a property, there. So you can see how this has happened. So housing has proven to be a good investment over time as we work through the irrational exuberance and the creative lending that caused this blowout of prices and this loss of value. But again, all those properties in here are still overvalued, but that's really not, that's 4 years worth of property at the very peak of the market. So they're overvalued, and 5 years of value shelf out there, and the shelf ends and more appreciation. So Norwich and New London's appreciating slower, but it is where the naval base is and the Coast Guard Academy. So if we look at house prices by state, you can see the 1-year appreciation and the 5-year appreciation here, in the 30s to 50% 5 years. And it'll be interesting to see Connecticut here, purchase only house price index, and at 7%. So Connecticut, one of the most undervalued states in the country at this point. Talks about expanded data, the different types of mortgages that are used in expanded data, and this shows you the comparison of the purchase only versus expanded data, so it's pretty close. We could be more specific about any type of property that you're interested. And this is a difference in purchase only versus expanded data information here. And you see, there's a 2% difference. So, national statistics, we'll move through this. You've seen this chart here. So you've seen how the recovery has happened everywhere else, and you've seen how the house price index has gone up everywhere else, and percentage growth. And this is the districts here. We're in the New England district, obviously. We're pretty similar here, which is good. So when we look at regions, it's again why Connecticut's undervalued here, right outside of New York City. So here's New England compared to the other eastern districts. Here's the peak, low, new high. So we surpassed that peak before here. So the whole area of New England has recovered. You see the same type of trends in the west and the other sections. And there's Connecticut for statewide. You see here we have the flat level here from 97 up through 2002. It starts to accelerate. We hit the equity line around 170 there when the houses became overvalued. As we headed up to the overvalued peak, and prices were coming down through 2009, and they continue to go down past then, but they've recovered. So everybody who bought after that point in third quarter of 2009 has equity in their property, and the value shelf was developed and existed for 5 years until we moved out of that 5-point range, which is why I'm optimistic about the future here. And these are frequently asked questions. Is the house price index a single family house prices that are using conforming conventional mortgages that are held by Fannie Mae and Freddie Mac, and they're under $729,000. So it talks about it's a weighted repeat sale index, the average price for repeat sales on the same properties. It's available for download. These are different types of transactions. How it's published, how it's updated, the difference between the Case-Shiller index. So there's a lot of good information that you can read on this FHFA House Price Index at FHFA.gov. And Freddie Mac and Fannie Mae have the largest mortgage holdings in the United States. So it's a pretty good database, I think. It's not adjusted for inflation. And these are the MSA, the Metropolitan Statistic Areas. Talks about how they're defined. Zip codes. But it's a reasonable area. That's the same area. Foreclosure sales are not included until they're actually sold. So if the bank forecloses on it but doesn't sell it, it probably won't come up in the stats. And that's about it. So the expanded index value. Again, but we saw that was pretty similar. So in end, this information is a public service. And I do this so that you can see the market. My goal is to help you become an expert. And I believe that home ownership has proven to be a wise investment over time compared to renting. There's a lot of reasons why investing in a neighborhood is better than renting. And I think over 30 years, if you look at how home ownership builds wealth, you're going to see that you'll have something at the end versus just paying more rent, which is going to go up. So I'm confident in the work, and my job is to help you make an intelligent decision of a good purchase, and realize what your options are and help you make the decisions. I don't make the decisions for people, but I do try to help them discern their options, because there is a lot of information out there, and it is overwhelming, but I think the more we put it out there, the more transparent it will be, and just give you the kind of confidence that you'd like to have. So thanks for watching. My name is David Carr. I look forward to meeting you, and I hope you make it a great day.